top 1% don't work harder. They work smarter. They don't invest like the average person. They don't rely on luck. And they definitely don't wait for permission to build wealth. Today, you're going to learn exactly how the wealthiest investors on the planet think, where they put their money, and how they keep growing it, even in uncertain times. If you've ever wanted to break free from average returns and start thinking like the elite, this is the blueprint you've been looking for. Chapter 1, the 1% mindset, scarcity versus abundance mindset. Average investors fear losing money. They avoid risk entirely. Top 1% fear missed opportunities more than they fear loss. Long-term over short-term. They measure success in decades, not days. Market dips are buying seasons, not panic alarms. Wealth preservation. It's not about doubling overnight. It's about never losing the core capital. Key quote, on screen. The first rule of investment is don't lose money. The second rule is don't forget the first rule. Warren Buffett. Chapter 2, the secret to asset allocation. 7 sa 12 a cog. Average portfolio, 70% stocks, 20% bonds, 10% savings. 1%. Portfolio, 30%. Private equity, venture capital, 25%. Stocks. 20% real estate. 10%. Alternative assets. Gold, crypto, commodities. 15%. Cash and short-term treasuries for opportunity buys. Why diversification is misunderstood. They diversify across asset classes, not just stocks. They also diversify across time. Some investments are for 1 year, others for 20. Chapter 3, private investments, the unseen market access to deals. Before the public top 1% invest in startups before IPO. They use angel investing networks, private funds. How regular investors can enter crowdfunding platforms, syndicate groups, REITs. Case study, early Uber investors, 2,000% returns before retail could buy. Chapter 4, real estate as a wealth anchor, income-producing real estate commercial spaces, multifamily units. The land banking strategy, buying land in areas planned for future development. Tax advantages, depreciation, 1031 exchanges, leverage. Mini tip, the 1% rarely buy real estate in their own name. They use LLCs and trusts. Chapter 5, alternative assets, gold and precious metals, hedge against inflation. Fine art, appreciates over decades, low correlation to stocks. Cryptocurrency, high volatility but high asymmetry potential. Chapter 6, the power of liquidity. Why do the 1% keep a large war chest of cash? They can pounce on undervalued assets in crises. Liquidity equals bargaining power. Chapter 7, risk management like the rich insurance on investments, hedging with options, futures. Never overexposed in one sector. Position sizing rules. Never bet more than you can lose. Chapter 8, building generational wealth, trust funds, and family offices. Compounding over generations. Teaching heirs to manage wealth, not spend it. Conclusion. The difference between you and the top 1% isn't just money. It's mindset, access, and discipline. The strategies you've learned today are not reserved for billionaires. You can start applying them right now, at any level. Remember, wealth is built quietly, over years while the world is distracted. The sooner you start, the sooner you stop watching from the sidelines.